Hey, crypto family. So the market's down again today. One of the biggest reasons is there's some drama with 3AC Capital. So I'm going to go over exactly what's going on with that. It actually involves LIDO staked Ether. And for those who don't know, that's been a big thing, stETH, over the past couple of weeks. I'm going to go over exactly what that is so people actually understand it. And then I'm also going to cover some tweets from some prominent figures, as well as some FTX data stating that they are basically suppressing certain prices of limit orders on Bitcoin. So first of all, again, look at the market. It's pretty bad. And the biggest thing right now on the news is about Three Arrows Capital. Okay. So on Defiant here, it says rumors swirl about financial stress at Three Arrows. It says on-chain data has prompted the speculation that Three Arrows Capital, a crypto-focused Singapore-based hedge fund, is insolvent and may become the latest high-flying company to crash the bear market. Now, it says Three Arrows Capital sold at least 40 million worth of LIDO's staked Ether early Tuesday, making it the largest seller of the token in the past week. The company did not immediately respond to a request for comment. And basically, stETH is starting to depeg from Ethereum, which a lot of companies are actually borrowing stETH. And with the price continuing to depeg from Ethereum, then in hindsight, a lot of these companies have been getting liquidated. And some of the more prominent ones now with Three Arrows Capital is where we are seeing that. Again, we saw it with Celsius Network. They're basically trying to battle insolvency issues right now. They halted withdrawals for their customers, and that was a big thing I made a video on a couple of days ago. But yeah, there's a lot of big companies right now. I'm going to go exactly what's going on with Three Arrows and what the timeline is, and if they're able to basically overcome this. So Suzu, who's the co-founder of Three Arrows Capital, he posted today, 4 hours ago, he said, "We are in the process of communicating with relevant parties and fully committed to working this out." Okay, so again, he's aware of it, obviously, but he's trying to calm a lot of the worry and trying to assure people that, hey, we are going to figure this out. Now, there's some good Twitter accounts that have actually posted some good on-chain data, as well as monitoring some wallet addresses by 3AC on basically them repaying back their loans. So on-chain wizard here, he said, "This wallet tagged as 3AC on Nansen has been aggressively paying back Aave debt against this 223k ETH, 264 million position to avoid liquidation, with 198 million in borrowing against it, a 85% lick threshold, a 11% move in ETH to the downside to $1,042 liquidates it." Okay, and this guy's been tracking it closely. And for those who know ETH right now, ETH is, we can even look at the price here, it's around 1142, and the lowest it's gone today, we can even see here, is that 1133 level, and actually went to 1075 not too long ago. So that's a big thing. You can see here I had that dip to down 1075. So again, that's something to watch out. Now, Three Arrows Capital has actually been paying back this over the course of the past couple hours, and you can see right here his latest tweet. He says, "Paid off another 3.4 million and removed 2200 Ethereum. Lick is now 1037." And then he says, "Couple more shuffles, now 189 million debt versus 215k ETH position." So again, it's good. Three Arrows Capital is actually working to decrease the amount they owe back for the loan and subsequently lower their liquidation price. But again, nothing's guaranteed. Any sharp move to the downside could liquidate them. Now, there's some more threads. Again, this I'm going to talk about stETH, exactly what it is. So Chainlink God, this guy writes some really good threads, some really good analysis and on-chain data. And he posted, "Seeing a lot of misconceptions and confusion around stETH, LIDO Finance, liquid staked Ether. Thought I'd write a short thread on my perspective." And for those who don't know what stETH is, it's a fully collateralized representation of ETH staked on the Ethereum proof of stake beacon chain. So essentially, one stETH equals one staked ETH. When withdrawals are enabled on the beacon chain, one stETH can be redeemed for one ETH. Now, again, this here, the withdrawals, one stETH for one ETH, this is going to be basically after the merge, I believe 6 to 12 months after the merge. So again, you could end up waiting a couple of years for this, but we'll talk about an arbitrage opportunity with that in a minute. It says, "Any comparisons to an uncollateralized stablecoin like UST are misguided." So it says stETH is an ERC20 token that has utility within a growing DeFi ecosystem. It also has a native yield attached, which you cannot get by having liquid ETH alone. There are many who will take on and carry the risk. Now it says stETH doesn't have a target peg. It continues to be collateralized regardless of what the secondary market values it at. Being able to exchange your stETH on the secondary market for ETH is simply convenience, but you go what the market values it at. Now, it rarely trades above peg, right? Usually seeing stETH trade below peg because of arbitrage. Talks about it basically, if it's trading above peg, then you can make a little profit. selling it, buying it for 0.95 ETH, selling it back, and being able to gain that 0.05 afterwards. Now, to the downside, he talks about it will be the first hard fork 6 to 12 months after the Ethereum merge. Again, if the Ethereum merge happens this August, like some people have been talking about, then you can expect it towards the end of the year or next June. So again, you have some time to wait. It is a little risk, but from what basically he talks about in here is that with the APR of 4% for Ethereum, if stETH does trade at about 0.7 Ethereum, then you could be earning about 38% APR over 2 years. Now, if it trades at 0.7, again, there could be a lot of people who get liquidated, a lot of companies who are holding stETH. So you can see right now it's around 0.95 of Ethereum's price. And you can see how many liquidations here on this chart. And you can see they really start ramping up as we get closer to that 0.85 ETH depeg level. And then it, just goes cascades down from there. So you can imagine right now there's not many liquidations. But again, a lot of these companies are holding a lot of it. And right now, Three Arrows Capital is in the scope for the next liquidation if ETH does continue to decline, as well as depeg on stETH there. So essentially, that's what stETH is. It's like kind of like a leverage collateralized that for DeFi, and basically it's something that's relatively safe. I always say that in quotes because nothing is 100% safe in crypto necessarily, but it's what a lot of people have been using to borrow and basically be able to use that as leverage. So again, that's why ETH declining is actually affecting stETH, the peg, and a lot of big companies' loans, and basically being able to repay them as well as potentially getting liquidated. So that's a big thing. Again, go and read up on stETH and why the depeg is such a big deal and why so many protocols are getting liquidated from the decline of ETH as well. Now, Pintoshi, this guy is actually pretty popular on Twitter. If you haven't followed him, at Pintosh1, has over 570,000 followers. He said, meant to mention something. I think this thread is worth reading when thinking of Contagion. It's a very, very real threat in the market at the moment, as we've seen Luna, Celsius, and now 3AC. We still don't know the fallout yet to come. So again, Luna and Celsius is still right now kind of teetering on the brink of insolvency, but they are, trying to help to repay back their loans and basically let customers be able to withdraw from their platform again. And it says, he basically quoted a tweet by Degen Trading, and it says, why Celsius and 3AC going under should cause you to worry. Now, he actually posted about Celsius the day before it actually halted withdrawals. So again, this guy has some good knowledge and is pretty reliable when it comes to that. But the biggest reason is 3AC is they borrow from every single major lender. So BlockFi, Genesis, Nexo, Celsius, expect every lender to take on hits from 3AC. So if they're borrowing from every lender and then they can't pay back, again, that's going to have cascades down in the big market and with a lot of customers. And basically scrolling down here, I don't want to read this whole thread to you, but basically the biggest gist of this, it says, what this means is that lenders will protect themselves by withdrawing credit from the system. All the lenders probably have about 50 billion estimated in loan creation. I expect 30 to 40 billion of credit to be destroyed, i.e. loans to be recalled and credit to be shrunk, which is huge. It says when the credit leaves the system, there's less money overall, less money for the same amount of coins, coin price down. And basically it says when the credit's removed, the overall balance sheet of every single payer shrinks because risk assets are marked down, market makers are less able to provide liquidity, bid-ask spreads widen, and then also basically a lot of people now, you have collapse of major funds and major lenders will shrink overall credit in the system and lead to continued deleveraging. So far, we've had an orderly liquidation, but more people need to delever still. So again, a lot of people are over leveraged, and that's kind of what's been happening with all these liquidations and all these companies not being able to repay or, basically honor redemptions such as Celsius because they are over leveraged. And it says, also, if you're wondering why Bitcoin and ETH are the first to be sold off, it's because in a crisis, you sell what you can, not what you want. There's no liquidity for shitcoins, alts, and dreams, right? So again, that's why you have a lot of companies basically holding a lot of Bitcoin, Ethereum. But now with everything going down, again, you have layoffs with Coinbase and a lot of other companies, 10 to 20% of their staff is being laid off. So that's just a big thing right now to keep in mind is the whole macro economy is basically, really, really bad. So it's where it's different from, a couple of years ago where it's just COVID. Now it's actually a lot bigger. You see inflation's through the roof and there's a lot of things that can affect the overall markets. And also, Pintoshi also posted another tweet. He said, Luna, Celsius 3AC, Contagion, those will lead to more blowups than we are yet to hear of. Things likely get worse before they get better until you start hearing about how all of these are intertwined and cause other funds to unwind, becoming forced sellers. Okay, so again, a lot of bad news here. I hate to talk about it, but it needs to be talked about just so y'all are in the loop and you kind of understand everything that's going on. And then last but not least, I talked about FTX. This guy, Kamikaze, he said, how is this not the biggest story on CT? FTX literally forcing orders into price bands. Oh, maybe because every shitty CT influencer is sponsored by FTX. And there's a tweet by this guy, BadQuant1. He said, 19,800 is out of band. And you can basically see this picture of buying BTC perp on FTX. It says the given price is outside of this futures price band. You can still place this order, but the price on your order may be changed to be within the price bands. Now, how crazy is that to not be able to place a limit order where you want? And basically because it's outside of a certain price band. So FTX is really trying to control the entire market. Okay, now we've seen, before Sam, SBF, CEO of FTX, he was seen in a good light. Now he's kind of just seen as this guy that takes money, right? And he's openly stated, he's going to have contribute $1 to $2 billion to Biden's re-election campaign, which, regardless of your political affiliation, he's trying to get money for that regardless. So where's that going to come from? Well, obviously the crypto market and the customers and clients are going to suffer on that, just like you've seen here. So be careful where you invest your money, where you trade at, right? And there are other platforms out there. If you want to do leverage trading, you got Bybit, heck, even BitMEX, a couple others, right? But just be careful and, know your restrictions, know how companies kind of what they can do with your money. And again, not your keys, not your Bitcoin. So highly recommend cold storage and just DeFi wallets, keeping it off exchanges and diversifying to stables such as USDC, BUSD. I would stay away of USDT right now. It has been under peg for 40 days. So that, there's still a lot of drama with that anyway. But with that, I know it's a lot of video or a lot of info in this video, but I hope I helped y'all out. I hope you learned a lot from here. If you did, please go ahead and give the video a like. I really appreciate it. Thank you so much for watching, and please subscribe if you haven't. I'll have more good info like this. I'll keep you all up to date as much as I can. I appreciate all my subscribers and viewers. Thank you so much for watching. Till next time.